Good afternoon, ladies and gentlemen. Good afternoon. Here we are. Paul's Monday market update number 210 for Monday, 12th of January, 2026. I hope you're all well. I hope you've had a good start to the year. I hope, unlike myself, that you have managed to avoid this kind of nasty winter flu that's been going around. I've been fighting it off for the last 10 days, but we're here, we're okay, and we're ready for what is going to be another eventful week in the year. For those of you who are joining us for the first time, never really been here before, the Monday market update is just that. It is me flying through as much as I can cover in the next 25-30 minutes, focusing on strength and weakness within FX and indices markets, looking at some charts of interest, and then taking a look at the live markets. It is not a signal service. It's not trade recommendations. It's just me sharing with you what I'm seeing and whether it has any benefit or help to you in your own trading and investing endeavors. As always, you are very welcome here, but just remember that you are always responsible for your own trading and investing decisions. And if you want some more education, I will be running the Monday Market Matters webinar this afternoon for active trades, 2 o'clock London time. And today we're going to be focusing on how to trade 3-bar reversals. You can either register on the website or use that QR code to join us. And if you want some help and support in making 2026 your best trading year, you can join the VTP Trader Accountability Group, basically a small group meeting every week to help you build discipline, accountability, and consistency in your trading endeavors. You can either ping me for questions, or once again, that QR code will take you to the page. Okay, let's cut to the thrust. All right, here we are to talk about the strength and weakness. Now, if you're new to trading or new to joining us, this might appear maybe a little bit overwhelming, but it's not really as such. Once you start to understand it, it's just some clips out of my own model from the work I do every weekend, looking to identify where's the strength and where is the weakness within FX indices and commodities markets. And because I know if I have that or I understand that, then it gives me a better view of how I can allocate my time, energy, and resources for the week ahead. So what's this telling us, and how can we use it? Well, here we are. We're into week 3 of the year for the for 12th of January. All right, and actually looking at where's the strength, where is the weakness. Well, in terms of strength in the FX market, Aussie dollar still remains top of the pile. Sterling has kind of worked its way into the sort of second position there, as you can see. Okay, from where we ended last year, where it's down 5th and 6th, you can see that over since the start of 2026, it's just worked its way up the STAM, and that has come at the expense of the Swiss franc, okay, which has weakened and come out of the sort of the top pair, and also what we've seen, which we'll look at later, is Kiwi dollar continues to sort of work its way back down into that into the bottom of the pile, where it is joined with the Japanese yen. Having climbed out of the bottom of the pile, dollar is an element of strength, and some of that will be a reference to basically the sort of kind of the all manner of shenanigans going on at the moment. Okay, so of course, yeah, we had last week we had the kind of the processing of the events in Venezuela. We also had people returning back to the desks, and we also had a lot of the jobs data, okay, and the NFP. We then also had the kind of overhang of Trump's comments about Greenland. We've had the issues going on in Iran and their bid for freedom, and then of course we had last night we had the Department of Justice printing a subpoena against the Mr. Powell and the Federal Reserve, causing him to actually go on and make a bit of a news announcement. So there's all manner of shenanigans going on. So I expect we're going to be in for a rather, let's say, eventful start to the US session, with that. But just at the moment, what we've seen is that dollar's kind of pumped up there, okay, at the end of last week. We'll look at that in a moment to see whether that actually has any legs, or whether it was just a little bit of safe haven flows there with that. Certainly, when we look at how markets have operated since we opened last night, well, if we can look at the strength and weakness there, well, it's very much kind of a risk on mentality. Everybody's a bit giddy, everybody's a bit happy, everybody's excitable, and certainly when we look at the sort of indices, global indices, you'll see that that kind of giddiness and optimism and excitement is certainly full there. And when I look at my own kind of work here, okay, in the if we look at the kind of indices and commodities, well, look how green it is. All right, it is all strategic or technical buys, okay, along with VIX being bullish as well to support it all. So everybody's a bit giddy. Everybody's a bit excited. Everybody's enjoying life at the moment. Okay, so that's the general consensus. That's the way we're operating. So, you hear me say it all the time. When markets are like that, I don't particularly want to fight it. Certainly, I'm wary of us getting overexcited. But certainly, when it's very clear that everything is in a kind of a risk-on bullish mode, well, then invariably, you don't want to be fighting that. You want to be finding a way to exploit it for your own benefit. Okay, so what we're going to do here is I'm going to switch across to the live markets just a little bit easier now. Okay, we'll start by looking at some of the charts of interest. So if you just bear with us for a moment, we'll switch across and see what that's showing up for us today. Okay, so hopefully that you can still hear me. Hopefully that you can see me. Okay, what I've done now is I've gone just across the live charts. So I've got a whole host of packages of charts. Okay, so for the charts of interest, the first one here is JP Morgan. Okay, so part of that is, as I said, there's an awful lot going on in terms of shenanigan wise, but also what we also have with that is that we're starting back into sort of full on earnings season, and we've got an awful lot of big financial companies primarily sort of starting us off okay this week. So we've got JP Morgan and Bank of New York tomorrow. Then Wednesday, you've got Wells Fargo, Bank of America, Citi. And then on Thursday, I think we've got Morgan Stanley, Gold, and BlackRock. So, it's going to be a fascinating week, okay, and people are going to be interested to see what's going on. So let's start with this. This is JP Morgan. This is the weekly chart, okay? So I think you can pretty much see, what the scores and the doors are in terms of, what we've been working. We've certainly been working with a very strong trend, okay, in JP Morgan. And I think we looked at this a couple of months ago where we were looking at, well, was there a kind of a double top here building at $300? And I was saying that, what I'd need to see is that the 20-period moving average has acted as really strong, okay, support and resistance, and I'd need it to break, and if it broke, well, then maybe we get back down to that kind of level. Well, as you can see, we couldn't really break even here where we came beneath the 20. Next week, we reversed it, and we reversed it into a real kind of morning star, and we've kind of just not looked back since. And so here we are up there trading north of 330. Okay, we're going to have a bit of a sort of a lower open today. I think a lot of that is there is an element of shenanigans. B, of course, President Trump over the weekend talked about they're going to be bringing in a cap on credit card rates. Okay, they're going to cap, I think, at 10% for. Did he say the next year, next 18 months to basically, and of course that's easy revenue for many of the big banks. So of course that will have had a little nip on that. Okay, and I think as you can see that the kind of pre-market is down like sort of $10, but I wonder whether that is just is just, as I said, just a little bit of a knee-jerk reaction. What we'll have to wait and see is tomorrow is and I think it's JP Morgan's tomorrow before the market opens is what the kind of earnings are, whether that continues this kind of this great bullish trend. Certainly, with all the talk about recessions and all talk about worries and concerns, and rightly so, for me it's very hard to basically sort of fight against that, right? When you can see that this has still remained in a strong trend, and JP Morgan is still kind of seen as basically leading financial sentiment. All right. So, as long as this is strong and in a good, strong trend, that kind of gives everybody else sort of, let's say not cause to relax, maybe not relax. maybe relax is too strong a word, but what it means is that we're still in that strong trend, okay, and that bodes well for the moment. So that's JP Morgan, that's JP Morgan there. Next, we've got BlackRock once again on the weekly chart. As always, I make a little bit of a kind of in the interests of full disclosure. I've got family members who work at BlackRock. Okay, so when I look at this, I have an interest. But what I'm really looking at here is, we just looked at a great trend there in BlackRock. Sorry, in JP Morgan, a great trend there. Whilst BlackRock has been pushing its way to highs, it's not been in the sort of same way that JP Morgan has been. There's been quite some significant pullbacks. However, we remain above $1,000. Okay, and what I'm interested in is whereas JP Morgan and as we'll see the sort of other financial companies have been in that strong trend. BlackRock has actually come off there a little bit, hasn't it? We kind of peaked out here. We kind of fell our way down to the 50 period moving average, inside bar at the 50. It acted as support. We pushed up. But now what I'm intrigued is that, we can see that the 20 period moving average has kind of rolled over a bit. So I look at this as prices sort of stuck between, a descending 20 period moving average and a rising 50. So I look at this as, this is basically, it's squeezing up. Look at that. Lots of inside bars there. Lots of weekly inside bars. Last week was a bit of a blowout of it, but still, it's kind of a bit of a doji. I look at that as, is that likely to be forming ourselves a lower high? Okay, certainly for me that if those BlackRock numbers are poor, okay, if there's any particular issues with that, then invariably I'll be looking for us to go back and test $1,000. But for me, that just looks like it's squeezing up before earnings, okay, and which are on Thursday, BlackRock, yeah. BlackRock Thursday before market, okay, and I think that's what we're just doing. We're squeezing before then, and those markets, as I said, that might be the earnings, could be the catalyst for the next move. And if the numbers are poor and general sentiment, okay, across the banking sector is poor, then yeah, it wouldn't surprise me for us to drift to 1,000. Naturally, if we get good numbers and if the overall sentiment is strong for the finance sector, well, I'd be wanting to see it break above that weekly 20 and then really, excuse me, pushing back to these kind of, that kind of 1160 is kind of, is the highest close. That's the way I'd be looking at that for myself and stuff. And so, into that region would be the move. So, it's a squeeze before the move from, as I said, I think Thursday could be the catalyst of that. We've got that, but it's as I said, there's a busy week going on as well. We've got lots going on. We've got CPI data this week as well, and PPI data, and for those in the UK, there's also going to be GDP on Friday. So it's going to be an interesting week. All right, an interesting week for us all. Yeah, next is Bank of America, BAC. I kind of looked at this because there are an awful lot of, as I said, those finance companies are reporting this week. JP Morgan still looks strong. The only one of kind of interest was that in terms of Bank of America last week we kind of printed that is a bearish pin bar. It's a bearish rejection candle. The pre-market is what only down $1, not so much compared to what we saw on JP Morgan. But once again, I'll be intrigued to sort of see, what do the numbers show in this? These are Wednesdays before the market. Once again, it has been in a great trend. Okay, JP Morgan, okay, a load of the others, all right, they have been in a strong trend. It's above the 20, which is above the 50. It's working its way. My kind of curiosity is that, if you look at that, for pretty much all of the kind of the lows have been getting higher as well. $55, I'll be looking to see, what happens. Do we break that? Okay, if those numbers and the overall sector sentiment is weak, well then I'm looking for us to be down towards that kind of 20. All right, that would be my decision point. And if that was to break, well then you're looking towards the big round number of 50. But alternatively, all right, maybe what we do is as I said, that kind of those kind of credit card caps, all right, which would have an impact, all right, on most of those banks. Okay, I wonder whether that's just the sort of the nip before the push higher. Okay, so we'll have to wait and see. As I said, a lot of these their earnings might be the catalyst for the next big move. This is a case of you having them on your watch list in a way that means to work with them. And if we look at here, XLF, okay, which is it's the ETF for the financial sector anyway. As we've just seen there on Bank of America and JP Morgan, the ETF also reflects that kind of strong trend that we have. Okay, and certainly kind of last week, if you look at that last week going into this week, that's the highest weekly close that we've seen on that. Okay, so that's definitely something of relevance and interest to ourselves. Okay, yeah, just a little bit of a gap down. Okay, expecting the pre-market, but not really a massive surprise. But the case of I'll be looking at here, that kind of $54, where is that going to sort of from where we had it as resistance, will that turn into support? Okay, could we drift down to there? And then once again, it's a case of coming up with that 20. We're gonna get an area of 54 and the 20 where it's a level that I'm of interest. Okay, if it turns into support, well then we push to highs. If it breaks, well then I look at us at 52, and then once again that big round number at 50. Okay, so as I said, I'll be intrigued to see what this chart looks like at the end of this week. That's why it's on my watch list to see how that plays out. And finally, okay, TSM, it's not all finance this week. It's not all finance. And we also have Taiwan Semiconductor Manufacturing Company. Okay, they have got their earnings this week as well. There's the Thursday. So of course, TSM has been caught up massively in the sort of AI bubble that we've had for the last couple of years, and has done remarkably well out of it. And as we can see, it has been just in a fantastic trend, like pretty much most things to do with AI or chips has been at the moment. We looked at this a couple of months, and this is, I'm always interested in these elements. We can see that when we looked at it last time, we were here at kind of $300, and I was curious to see, well, what was the price action telling me? I'm always intrigued to see how does price react at significant levels. And if I'm honest, that price action there I was looking at was, I was not exactly bullish, I would suggest. Okay, there was a lot of issues to do with, is the AI bullish AI push just a bit of a bubble? Are the kind of the issues with China? Okay, issues with some of the other players within that kind of sector. And as you can see, the price action was, I'd say, pivoting around 300, but there was an awful lot of kind of bearish price action there, wasn't there? And that's I was looking at seeing this if you follow kind of like Stan Weinstein. Is this a stage three here? We've had a good uptrend. This is stage three before we get the stage four down. That's what I was looking for. Once again, it couldn't even get down to the 20 period moving average. Okay. And what we can see is that, we've started this year. Well, all that kind of AI giddiness has returned. We've blown from trading at the end of last year around about $280 up to sort of as high as $330. That's been quite some significant move. Yeah, there's a little bit of a gap down in the pre-market. Okay, but once again, in the same way that we're looking at for finance, as long as finance gives us good numbers and good sentiment, then everybody remains risk on giddy. If the TSM numbers are poor, and they are not expected to be poor, I think the kind of the initial elements that I saw is that they were expecting, I think, sales up 20% in this last quarter. So people expecting good numbers out of TSM. The question will be, is it enough to keep it wafting higher with strength? And that's why it's on my watch list for this week. As I said, once again, I'll be intrigued to see how this chart looks at the end of this week. Okay, so there you go. So there's some charts of interest that you can take away and add to your watch list. Now let us switch across and have a look at the live markets to see what's going on there. So if you just bear with us a moment, let's bring up those other charts here. Okay, all right. So I'm just checking that everybody can it's updating there, because I appreciate that the people watching this on YouTube as well. Hopefully that's it's coming through for you. All right, here we go. Indices. All right, let's have a look at the indices. So I've got Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, oil on the weekly, DAX, Nikkei, and FTSE. Overall, the big picture is as you can expect. All right, so it's that risk on giddiness, isn't it? That risk on giddiness. You can see that across the US markets, also continuing DAX in Germany, very much so in the Nikkei, and also the FTSE. So You can see from looking at the STAM earlier, even just looking at those financial stocks, okay, there was very much a kind of risk on giddiness at the moment. Everybody's happy, everybody's everybody's having a great old time, and particularly if we look at a couple of these. So, for example, we had S&P 7,000, all right, we got 7,000 there, kind of last week into it, all right. So it's going to be a big number. Everybody's going to be clear to see how does it react there. I'm always intrigued to see how we react at big numbers. We look at Russell. Russell basically bang hammered its way into the start. Okay, there, and what we've seen, what we've excuse me, what we've seen there is, that is the weekly chart. That is its highest weekly close. From when we were looking at here, okay, end of March, April of last year, that is just quite some amazing move. All right, that really is quite some amazing move, and I hope that you've all caught a part of it. And Dow as well. All right, Dow had its it's starting off, it's closing at its particular highs. We were looking at there. Okay, where did we close? 49,730. I mean, you've got to start. I think that 50,000 is kind of the level that is going to be the magnet to draw it down towards. And once again, from being down here at kind of there, where we were, back down to sort of 38, all right, 38, 37, to go to up to near 15, and that has been quite some turnaround, hasn't it, ladies and gentlemen? That is basically pushing it. And my view is that Trump is going to continue to do all he can to keep this going into the November midterm elections. Whether he can sustain it for that next 10 months is another question, okay? But also it kind of adds another certain flavour to the let's say to the political shenanigans, all right, and judicial shenanigans going on with Mr. Powell and the Federal Reserve at the moment and stuff. So yeah, and as of course that will, you have to wonder whether that will help things, or long term will that basically affect people's trust in basically in the Fed and the US in general. But you can see that the actual one that's kind of maybe has lagged a little bit, as you can see, is Nasdaq. Nasdaq, has not been pumping its way there. Okay, maybe we'll wait for the kind of a bit further into earnings season. But there you go. It looks to me like we're still putting up. It's still above the 20. Okay, it's still working its way there. But clearly the kind of there's been a rotation into other elements there, I would suggest, and that's what's taking us higher. And Nasdaq is the laggard on the kind of longer term front. And when you look at even Nasdaq compared to its foreign competitors, you can see that is most definitely the case. Look at Nikkei, okay, with all the shenanigans going on with the new party in Japan and Japan itself, okay, and what it's looking to achieve, and the Bank of Japan, what we are seeing is that basically that kind of that liquidity is finding its way into Japanese markets, and it's just look at that, that is just plowing its way higher. We look a little bit closer, the DAX, okay, the DAX weekly, I remember I said here a couple of months ago, if we cracked this, it was very bearish, but we didn't. We bounced and we bounced and we clattered our way through on the DAX and continue. Look at that. All right, look at that. That is, on the daily chart from that kind of, that's what I call diamonds. All right, 3-bar breakout, pushed up to those highs, pull back into the 50 with a bullish engulfing, and we've not looked back, have we? And look at the heart, look at the lows, tick tick tick. That's just showing us that kind of that strength that is there. That's just absolutely plowing its way higher. And even FTSE, all right, even FTSE close to home continues, all right, having done 10,000. We actually flipped it here. I was watching this kind of on an intraday basis last week. Let's get on to the 4-hour chart here. Yeah, we kind of, we started last week, we pumped it, we came back down into the area, kind of around about 10,000, and then pumped again and stuff. It was kind of, yeah, kind of nice to watch and engage with. But yeah, you can see that when I say there's risk on giddiness going on, it's everywhere. Even gold had a bullish week last week. Okay, yeah, we're still beneath 60, still in an downtrend, but it had a bullish week itself. But interestingly, even with equities and indices pushed to highs, we also have still continued with gold. All right, I thought we would maybe I personally thought we'd kind of drift maybe and just hold for a couple of weeks to sort of till people worked out what the score was. But no, it's not interested, is it? Look at that daily chart pushed to new highs today. Okay, so it's just that's a bullish trend, all right? Yeah, it's a bullish trend. So, you don't try and fight it. There's a real big gap up there, on there. And now, is that a reflection on Greenland? Is that a reflection on Powell and the Department of Justice inquiry? There's take your pick, all right? Take your pick. But it's amazing that we have risk on giddiness pushing equities and indices to highs, and also gold continues to do the same, as does silver, ladies and gentlemen. If you look at silver, having pushed, and then we're putting a bit of a bullish inside bar, but bang, you can see for yourself the daily chart. Here we go again. Once again, I thought we might coil up a little bit over above 70, okay, as people start to sort of work out what the score was, but no, not interested at all. Look at that, the end of last week, okay, just basically bang, away it went. Two highs, okay, two those highs and stuff above 80 is just yeah, it's quite something, isn't it? It is quite something. Let me just update this on here. Try and make it a little bit easier for people's sort of frames of reference. Yeah, you can see. Look at that. That's just, yeah, make of that what you will. And weirdly, Bitcoin has perhaps been the laggard. I was curious here that I thought we might sort of start to get a real strong push up back to 100,000, but it kind of didn't. It looked like it was going to start, okay, but then we're sort of fallen down a little bit. I still am a bit bullish on Bitcoin. I still think that actually the 50, the 20, 100,000, I think I still see us kind of a push there. I just think it's too big a psychological pivot, all right, for us not to revisit it. And so short-term traders that kind of, let's say, 4-hour chart doesn't look terribly exciting, does it? There, okay, but I wonder, just to watch to see how that particularly plays its way out there. Naturally, okay, if you're looking at those instruments, gold and silver and oil and Bitcoin, you're also going to be curious about dollar. So let's have a look at what the dollar is showing us. Okay, so whenever I'm looking at those FX markets, I'm always starting with the dollar before I go elsewhere. So this is dollar profile here. Aussie dollar, Kiwi dollar, Euro dollar on the daily, dollar CAD, pound dollar, dollar yen, dollar Swiss, and then dollar index on the weekly there. So bang, let's bring up the dollar index on the weekly. So as I said, we had drifted down into the end of last year, but we started, a bit of a pump. Now, admittedly, a lot of that, as I said, I thought was a Venezuela kind of easy liquidity safe haven. That's where we started our way up, but kind of we hit the 50 on Friday, and it the 50 in the same way 50 here, it was pivoting around it. We've seemed to have pivoted around it a little bit here, haven't we? Just kind of popped up and dropped up. If we look at the 4-hour chart there, yeah, you can see how we worked our way up to that 4-hour chart. There's the NFP numbers. This is always intriguing to me because 4-hour chart, you can see just clearing out orders left, right, and center, and then you get basically, I could always say, it's like inside bars. It's markets are like humans. You surge, then you rest, then you surge again. So this was a surge, this was the rest, and now we're getting the surge again. And for the moment, it looks like we're getting beneath that 4-hour 220 period moving averages. So then I start to look at, well, actually, okay, does the 50, do we start sort of kind of 98.40, 98.40, 98.30? Does that become where we drift to before we make our next decision? So you can see last week, we had strength in the dollar, but this week we've kind of weakened into the start of it, and that's what you're reflecting there. Even though Aussie dollar's been top of the STAM, you can see that last week we kind of drifted lower, but actually this week we've started. Same with Kiwi. Okay, with Kiwi, we drifted lower, but we've had that kind of Kiwi strengthen a bit there. Dollar, strengthening against the Canadian, strengthening against the euro, strengthening against sterling, strengthening against Swiss franc. Okay, strengthening against the Japanese yen. That's what it's doing. But then I wonder whether just basically the events with Mr. Powell, whether that just basically dents a case of dents confidence in the dollar. and whether it adds fuel to another kind of anti-US, anti-trade, anti-dollar trade. That's what we might be looking at. That's what we might be looking at there. All right, I'm going to finish off quickly with Kiwi dollar and then sterling as always. So as I said, here we go: Kiwi dollar, Kiwi yen, Euro Kiwi, Aussie Kiwi, Pound Kiwi, Kiwi Swiss, Kiwi Canadian, and gold. We know. So as I said, Kiwi has dropped to bottom of the pile. And we can see that there for the last couple of weeks, Kiwi was weakening against the dollar. The clear thing is that as Kiwi has dropped to the bottom of the pile, Aussie has been at the top of the pile. That's the STAM. That's strength v weakness. That's what I want to be trading. Okay. Pound, okay, which is second, that has strengthened against Kiwi dollar. Swiss franc, which has weakened, is pretty much sideways against the Swiss franc. Kiwi against Canadian dollar. I think they're sixth and seventh. Remember, I don't really want to be trading blue on blue. I don't want fratricide. Okay, I want strength v weakness. But you can see what's been pulling the Kiwi there, can't you, with its moves. And let us finish off with sterling as always. Let's bring that up. Hoping I've got this on the right things. Okay, so bang, here we go. Cable, pound yen, euro sterling, pound Swiss, pound Aussie, pound Kiwi, pound CAD, FTSE. Okay, so pound cable. Let's start with cable. Cable, I was intrigued that we printed this big bearish pin bar here, okay, last week, but then actually, and that's the reflection of that. It's kind of a nice trade on the shorter time frames down to these levels. But as I said, that kind of dollar weakness has pumped everybody up there a bit this morning, okay, and that's what we had. Literally, we had a bit of a sterling pump this morning. There's a couple of nice sterling strength trades there, as opposed to last week where we pumped. And then you can see it was just a great swing there on that lower. So that's all being driven by dollar. Pound against yen, that continues to be sterling is strong, yen is weak. That's my job to basically to trade the STAM, to trade strength for weakness there. Okay. Interestingly, pound against Aussie, even though Aussie is it's top, sterling is second against. Even though you can see pound is weakened against Aussie, even though it's worked its way up to the second place. What was intriguing was there's a kind of trade of mine last week was what we saw last week was this is a 4-hour chart. We came down to the 2 big round number and we bounced off it nicely. Nice rejection candle, false breakout, and then we popped away up to 50 in front of the NFP. Okay, and for me, that sort of trend is still down, a kind of longer term dominant trend. It needs to get above that 4-hour 50 and hold above it, and then the 200 to give me an indication of kind of any sterling strength and Aussie weakness. Pound against Swiss. Remember, Swiss has dropped. Sterling has taken its place, and it's kind of a bit weird, isn't it? All sterling, all buys. Okay, that's what I sort of said last week. It was kind of basically Swiss franc weakening, whether that's from shenanigans on their end, and basically sterling perhaps doing well off the back of an anti-Trump, anti-dollar trade. Look at euro sterling. That had been in that kind of nice downwards channel there again. Had been for the last couple of months. Last week we started to see maybe a little bit of a turn, and that was actually really nice price action there. We the week before, okay, at the end of last year, downtrend, we bounced off the 50 and really collapsed, and then we put in this really nice 4-hour double bottom here, and we've worked our way back up, and now look at that, we are squeezed a bit between the 20 and the 50. We had this move there this morning. Okay, there's a kind of 4-hour chart move there to bounce off that 50 lower there. So there's some play going on there. Okay, well, you might want to just keep an eye on that. Okay there, ladies and gentlemen. All right, we overran a little bit, but as always, it's the start of the year. There's lots for me to share with you. I appreciate that I fly through it, but I'm trying to share with you as much as I possibly can in the 25 to 30 minutes. I hope you found that useful. I hope it's given you some food for thought. I hope it's given you some things that you can add to your watch list. As always, I wish you the very best of success in your trading week. And I look forward to speaking to you soon. Take care, everybody. Cheers.